positioning of the group and broadly its investment into the future. That leaves our total cost growing at 2% against the 6% growth in total income. And as a result, our profit before tax grew by 17% from 51.9 billion to 60.7 billion. Profit after tax grew by 12% from 43.7 billion to 48 billion. In terms of distribution of the profit available for the year, we see 16 billion shillings being devoted to dividend with the retention, which is 34% of all available for distribution, and the balance being retained. And we see why the board is recommending a retention of 67% of the distributable or available for distribution. As a result, earnings having gone up by 12%, dividend has increased by 6% from 4 shillings to 4 shillings and 25 cents, giving us a dividend payout of 16 billion shillings, up from 15 billion shillings. Dividend payout ratio, as we said, is at 34.5, with a dividend yield of 8.9% and dividend yield on par value of 850%, which has gone up by 6%. So broadly, that shareholders represent the balance sheet and income statement for the year ended 24. But if we do a deep dive on these numbers, we see the regional banking subsidiaries contributing almost 50% of deposits, of loans, or assets at 48 or 49%, but revenue at 54%, meaning that the yield on assets is much higher in the subsidiaries. We see profit before tax, the subsidiaries contributing 54%, and our mother subsidiary, Kenya, contributing 51% of the profits. We see that the total banking group has a return of 20.8, but when we disaggregate, we see regional subsidiaries contributing a higher return on equity at 21.4% against Kenya's 20.4, and as a result, a return on asset of 2.7 for the regional subsidiaries when Kenya is 2.4. This suggests that our growth is value creative and that the subsidiaries are positioning as better returns for the future because they have higher returns, and that explains why the retention of profit is to finance this growth that is generating much higher value than Kenya. In terms of diversification on lines of business, we see the non-banking subsidiaries increasing in their asset contribution, in their revenue, and in their profit before tax, gradually from last year's 2.7, but 2.7 to 3.1, again confirming early signs of the startup of the insurance industry being also value creative. Shareholders, I would love to draw your attention to the return on equity, and we see the non-banking subsidiaries contributing a return on equity of 36% against the banking group of 20.8, and return on assets of 5.9 and 2.5. It's nice to observe that the bulk of this income from non-banking is off balance sheet, and as a result, is not as much as capital consuming as comes to the bank. In terms of market positioning, we see the equity group becoming systemic in the region, dominant, particularly in our two largest markets, where in Kenya, we're almost 1.5 times bigger than number 3 bank, the same almost 3 times bigger than number 3 in DRC, and taking a commanding second position in Rwanda. So we are becoming systemic and in the region, which is very suitable for trade, finance, and treasury functions. We see Uganda climbing up its position and headed towards being number 3. We see from number 6 last year, it's now number 5, and South Sudan improving to number 4, and across number 4 to number 3, as we see also Uganda is close to number 4 and number 3. And we are optimistic that this year will really focus on making the two subsidiaries join the ranks of the top 3 in each of the market, a position we have been preparing for. The group, as we said, in other cost, which grew by 25%, is truly focused on transformation. And that increase of other cost by 25% is in funding the group transformation. The transformation has started with the strategy, where, as we heard the chairman talk about the African Recovery and Resilient Plan, it's heavy investment in developing the future plan. This strategic plan helps to transform the bank from supporting and driving financial inclusion to deepening use of financial services. And so it is heavily product driven with great emphasis on a solid product house so that we can provide the right product for our clients. The strategy of the bank has also slightly tweaked the purpose and the vision of the bank to drive wealth creation and socioeconomic transformation of Africa. So while financial inclusion remains important, the strategy is now focused on wealth creation. It's about transformation of agricultural sector using productivity gains, setting up and supporting manufacturing sector, particularly agro-processing, strengthening the value chains of those formal sectors by supporting and formalizing the informal sector, the micro, small, and medium enterprises, so that we can have an integrated private sector in the region. A great emphasis on business model, ensuring fit for purpose. As that change happens, the business model is also refined, and that the organizational culture becomes that heavily performance-oriented, as we remain very customer-centric, but is the transformation of the customers other than just fulfillment and satisfaction. So this whole transformation also adds up with the customers, and as we said, it's the customer is the right product and fit for unlocking opportunities for wealth creation on the African continent. It's about fulfillment of the customers. To achieve that, then we had to address governance issues, and the governance issues are big, restructuring the group to reduce complexity as we become big, to manage risk better. And so the group has seen us divide the entire business into 4 groups. There is the banking group, there is the insurance group, there is the technology group, and of course, there is the driver of our social impact, the equity group foundation. And that reduces the complexity because the groups are managed on a standalone basis, but coordinated at the investment level. That then means in looking at the skills that will be required by every group and developing the capabilities of the executive management and having a fit-for-purpose organization structure that addresses governance issues, execution issues, performance issues, and leadership in the marketplace. To enable that, then we need the systems and processes, and I'm happy to say we have had a complete overhaul of our technology platform, from the core systems, from the underlying infrastructure, the banking systems, the insurance systems, the investment banking systems, so that we can now lay for the 2030 aspiration of having 100 million customers. We're grateful to our partners, particularly HP, that has enabled us to put a technology stack that has given us processing speed that is 80 times higher than we have ever experienced. And as a result, we are only using 24% of the processing capability, confirming that we are ready for 100 million customers without further investment. We have upgraded our Oracle databases to ensure that we could be able now to work on big data, data and analytics, and of course leading to use of data, particularly in decision making, and particularly in AI and artificial intelligence. Machine learning is now embedded in our systems to provide better information for better decisioning. But we cannot be complete in terms of change and transformation if we don't look at people. And from people, we have looked at the skills, the competencies, the application of culture, performance culture, and then we have looked at how to attract, retain, and keep great skills. And as a result, particularly shareholders, we are very grateful for helping us to establish the employee share ownership scheme, and that has helped us to attract the right skills, the right competencies. The elaborate pension, medical, and group life schemes have come handy in ensuring there is no, so that is the transformation that we have been going through, and we can do a big dive on each of them to see what this has involved. And this transformation is what has caused our other operating costs to grow up by 20%, because of most of them are operational cost, and it will be part of the recurring cost because of its systems. We'll be depreciating them as we move forward. The governance structure has led us into an organization structure that is now more elaborate, that allows specialization, that allows us to have the right skills at each group level, so that we are able to be more efficient, skill and competence driven. We had introduced you to the management that appears on page 38 of the integrated report, but maybe I would like to call on the management, if we could get the camera point to the management, so we don't just see them in picture, but we could see them from where they are seated. I'm grateful that they have been able to join us today. In terms of our organization, we all believe an organization can never be better than its people, and the quality of the people we have attracted gives us a huge promise that the transformation that we have embarked will take this organization to the next level. I'm humbled by the commitment that they have shown of joining Equity, and we'll do whatever it is to be able to match the expectation of our board. The chairman talked about strengthening our board, and because this is part of the agenda that will be put before the board for decision making, allow me to take a few minutes to explain the composition of the board members who will be presented. As we said, Equity is on a journey of transformation. It's imminent. The transformation, as we have seen, has been very successful with the banking group, with the non-banking group showing a great success at early stage of our transformation. As a result of the objective of reaching 100 million customers by 2030, we have seen growth will be a major driver of that objective. And that growth will see us maybe in 15 countries by 2030. That strategy will be more of execution of investment decisions. It will be about selecting countries to invest in. It may involve acquisitions and merger strategy. And so we needed to strengthen the holding group with the skills and the competencies. And I must say, our global brand recognition has helped us to attract a very solid board members. Talking about Farida Kabata, Farida ended her career as a vice president of IFC, the World Private Sector Arm, and she was in charge of operations for East Asia Pacific. And if we look at the region, the East and Central Africa is mirroring itself to Southeast Asia. So she brings a lot of experience that will be handy in making the decisions. She has significant experience from board perspective, seeing her a vice president or vice chair of the Tata Group. And we can see Tata Group is a great inspiration of what we are doing, the formation of group. We look at Cargill Food Company, the focus that we have of agriculture, the focus we have of manufacturing in Africa, and we believe she'll be a very resourceful person and has built the right networks, having been vice president of portfolio and risk management at IFC at the World Bank, and being a part of the Katika Capital private equity investment is a fourth part, and we believe that is why the board will be bringing Frida to the shareholders for consideration. Looking at Nick O'Donoghue, similar experience, strong academic qualifications, but we are very impressed with his experience as the outgoing managing director of the British International Investment, which for many years we called Actis. His experience in JP Morgan, and that experience becomes very, very handy for us as we look for investment opportunities on the African continent, the opportunities for mergers and acquisition, because that's what BII does in its investment. The experience and the network, particularly from his board experiences around the world, the vast experiences, becomes handy as a mentor and coach to our management team. So the board is not just boardroom decisions, it's the responsibility through board committees to mentor, coach, and develop our management. And we are lucky to have Nick. Aloysius Uche Odu, a renowned global economist, having been an executive director at Brookings Institute, one of the oldest thought leader institute in the world, brings in that discipline of thought, critical leadership. Being a member of the Central Bank of Nigeria Monetary Policy Committee help us to understand the thinking and the mind of a regulator as regards interest, inflation, exchange rates, and helps us again. He will really, given his exposure at the doctorate level in economics, will help us also to do analytics at particularly the economic level and bring the right challenge to our economic division. And again, is somebody who, given his professional experience, his academic qualifications, would be able to help our management. If you look at the board, those four board members, three board members we have talked about, we bring India and Asia into the board, we bring Europe into the board, and I believe there is a board member who bring the Americans on the board. So we have a global perspective, global thinking, but executing locally. But also from West Africa, Royce, we then come and say, where are we doing business? And we realized we are now doing in East and Central Africa, and we felt it was necessary to bring board members who comes from the regions where our subsidiaries that are contributing 50% of the business. And from Rwanda, we got Badia Belalo, who for 16 years was the Rwanda's Auditor General. And we all know the history of Rwanda. Previously, Ernst & Young as a senior auditor, and so he brings financial acumen, but particularly more on governance. And looking at Lakshmi Sundar, again, a professor of risk management at MIT, and her last job was as the Vice President and Chief Risk Officer of the World Bank. We believe she helps us to develop our risk capability. Banking is about risk management, and so while internally we are building capabilities, that capability needs to be tested. And Equity is lucky to have been able to attract Lakshmi, whose vast experience and professional experience, academic and professional qualification, almost guarantee us that we'll be at the cutting edge in terms of risk management. Her board experience, particularly in the financial sector, and particularly both insurance and banking, and of course supervisory level, give us deep insight of what the conversation. Shareholders, then you could imagine the quality of conversations that we would be having at the board. And lastly, we have a great focus on DRC. We believe it's one of the most promising markets we have. We have had this prediction that DRC will be an overweight in the equity group portfolio. And it was important to get somebody who could help us understand and bring the opportunity in DRC and a mechanism and a style of managing DRC on the board. And we couldn't get better than Engineer David Mutumbo, who, after many years, the global scene as an engineer in water, is now challenged to lead the DRC Water Corporation with an objective of providing clean water to 100 million people. So engineering, it will be an important speak. People always say that an organization can never be better than its people, than its leadership. This leadership gives us huge confidence that the transformation that we have of equity will go extremely well because we have the right people. The right people makes the right decisions. The right decisions leads to the right outcome. And it's for that reason that we have offered. Of course, appointing 6 board members at 1 new board members, one would ask why. But the Capital Markets Authority have changed their regulation and classified anybody who have been on the board for more than 6 years as non-independent. And most of our board members had served for at least 6 years, and it's for that reason, to ensure we comply with the ratio of independent board members, that change was necessary. But we found a huge opportunity to utilize the experience, the knowledge, and understanding of the strategic aspiration of this organization into our subsidiaries. So Kenya became a big beneficiary of the change at the group, and Mr. V.J. Gidmo, who was the chair of the strategy committee of the group, joins Equity Bank Kenya and bring the aspirations of the group live to Kenya. As we all know, and board members have seen, Kenya has started to transform, turn the corner. We believed it was important to strengthen the leadership. And so Dr. Ruth Kagia, long-serving World Bank member of the board, and Harvard alumni, joins the Kenya board to make her contribution, to bring her networks and ensure that as we hope that DRC will be an overweight, Kenya will continue to ground and solidify the group and remain, the group remains a Kenyan risk or an East African risk. John Wilson, who those who know, served for a long time IFC, heading as the global head of commercial banking, joined the group as the chief risk officer, and when he retired, we felt his skills would continue to be very useful. John was part of the board members who helped turn around Tanzania, as we saw, and we have asked him to serve on the Kenyan board, bring the skills, the experiences, the insights he knows from his days in management, his experience as a board member in DRC and Tanzania to Kenya, and bring that to bear so that we could be able to get Kenya bounce back to what we expect it to be. Tax has become a very significant component. When you start making profits up of 60 billion shillings, you require to be very efficient. And the board has invited Mr. Richard Dongo, a former partner of KPMG, actually managing partner of KPMG, to join the Equity Bank. He's a technical expert in tax management, tax planning, so that he could help the Kenya subsidiary. So 4 new board members, VJ coming from the group, Dr. Ruth Kagia, Mr. Richard Dongo, and John Wilson joins Equity Group Kenya. Board member shareholders, you can see the focus we have on repositioning Kenya and ensuring Kenya becomes our center of excellence. Kenya has been challenged by DRC on growth and has been challenged by Rwanda on efficiency, and those are the 2 parameters. As we said, DRC is very, very central to growth. And again, the board of DRC has been really strengthened. We have Yvette our national board member who has deep knowledge in DRC, who understand the philanthropic center, the development sector in DRC, having worked with the UNDP, USAID, World Bank in DRC. So she brings that deep knowledge and deep network and experience to the board. Eric Bomba, previously a managing director of Standard Chartered Bank in DRC, joins the board, bringing very deep insights of managing banking in DRC, managing insurance in a wider sector, being an MD, having been an MD of Prudential, deep insight in the mining sector, as we can see from his qualification, academic qualification, having focused on information technology and corporate strategy with a focus in mining, and a master's in Harvard and an MBA from Chicago. He brings deep insight in DRC, executive knowledge, and could be an excellent coach for our management. We call him Fodre A.T. Kadita Tishimbaka. We honored that he has agreed to join Equity Board in DRC. He was the global head of risk management for Citibank for over 30 years, where he worked in Citibank for 30 years globally, and he brings that global knowledge back to DRC. He has a heritage of having been born in DRC and worked most of his life in the US, and he brings both the local and global networks to play. But more importantly, the skills of managing risk in a complex market like DRC. And of course, we also needed to deepen our investment. DRC is a very fast region. It's not just about making a risk, but we also needed other seasoned bankers. And we couldn't get better than Sandra, a man who worked previously with JP Morgan across the African continent, IFC, and brings in a lot of financial management experience, which we have found very handy, particularly in linking DRC and global markets. So the insights of global market, the insights of analysis, challenging our management with better papers is in very good hands with that board. So we can see the great focus that we have in Kenya, our largest subsidiary, great focus on our second largest subsidiary, the subsidiary with the highest potential. But the board felt maybe we need to give DRC a challenge, and we couldn't get a better challenge than focusing on Tanzania. Tanzania has enormous capability, and the only way to unlock that capability was to start at the top, significantly enhance the board, enhance the management, and we focus truly to unlocking Tanzania. Tanzania is the only market we are not in the top four, and as management we feel embarrassed for not positioning Tanzania appropriately, and this is our opportunity to do things differently. So Dr. Florence Martin Turuka heads the board in Tanzania, an agriculturalist specialist, and we felt that agriculture is the biggest opportunity we have in Tanzania and agro processing. He's joined by Godfrey Kirenga, again another accomplished agriculturalist, He's then also joined by 3 more colleagues. It's a fairly enhanced Sule, who brings corporate experience. How do you manage corporates in Tanzania? As we can see, he has managed many corporates in Tanzania, and so could be a very good coach and mentor to our management in Tanzania. And of course, maybe we have not been very successful because we have not been very effective in communicating, in advertising. The board needed somebody who could help in communication, and Mashumu joins the board. So it's not just the group board, but the subsidiary boards. And of course, Terry brings the dynamism of a young board member who is able to link effectively and challenge management, help the management, and we are very grateful to also to have seen her join the board. I gave these dynamics of 3 subsidiaries just to show that it's not just about the group board that is renewing itself, but we have renewed the subsidiaries so as to achieve the objective. But our greatest objective is in the insurance industry, where we think we can differentiate ourselves through the health insurance. So the health insurance at the moment is under general insurance, but we have submitted a board to the regulator, headed by Joseph Josh, who managed one of the largest insurance companies in Europe. And we believe that his insights, I've had the privilege of visiting on a study visit or benchmarking visit to Spain, and I realized what potential we have in insurance, and we thought we could invite him. Our own Dr. Gatonga, who is the managing director of health insurance, brings in huge experience. Tom Mushidi, most of Kenyans would know him, a specialist in communication, joins the board. Former chief executive of Nairobi Hospital, Cleopa Mairu, a medical doctor, formerly cabinet secretary on health, and Kenya's representative to World Health Organization, joins that board to bring the experience that would make us serve people better. We are very excited too that young beneficiaries of our scholarship program who did medicine, Kevin Dilango and his colleague Alan McKenzie, joins that board. They can be coached, they could be mentored, but more importantly, help us to do the link with the providers of health, so that we are looking at it holistically, and the voice of the franchisees is represented on the health insurance board. Emery Bwaka brings enormous experience. We have been humbled by her knowledge, her passion, and challenge to the management, as is the case with Dr. Jacqueline Kituku, who is currently the president of the global health. So a lot of technical qualifications, people who brings in a lot of board experience in what would look like a startup, and a mix of young beneficiaries of our scholarships who can then learn and be the face of the future. In the technology, we have started attracting highly qualified people. We have Salah Kabila joining that board, bringing a very entrepreneurial mindset, but with deep academic knowledge, deep network in the fintech world. And lastly, is the strengthening of the foundation. We know as we grow stronger and stronger in the economic engines of technology, of insurance, of banking, we need to strengthen our social arm, our sustainability arm, and that board, again, I'm on that board. We have Zainabu Jaffa, who have served in the board for quite some time. We have Dr. Ruth Kagia, that's where she's coming from, the board of the foundation. Ambassador Manoa Esipisu is on that board. Specialist in communication, Ambassador Machalia Kamau, along serving you, and a staffer who brings enormous knowledge, including being Principal Secretary of Foreign Affairs, Dr. Helen Ishohi, an environmentalist, and Samson Bayer. So we can see that is just, and of course, in terms of communication, Gina Dean Kariuki completes that board, not completes the Chaldean. So leader is reconstituting the boards to have the breadth, the depth of skills and knowledge, but more importantly, to honor who we have become. Recently, the Financial Times described us as a global conglomerate with its headquarters in Africa. So if we are global, we should look global, we should act global, we should think global, and that thinking starts at the board. So we're very excited. That depth, that work that has been done on governance and leadership is what have been done in systems, have been done to customers, and has been done to strategy. And I'm sure we all know what is also happening in staff, not just hiring, but it's also ensuring we build the culture of openness, of transparency, of integrity, because as the staff are our blood carriers. And so we have gone through an elaborate process of review and auditing the conduct, risk of our staff, risk of conflict, and we have learned a lot how to ensure the culture of organization is understood, is lived, and that it is important to perform, but equally important how you perform. And that is what the board felt the conduct code is. Put these together, it creates maybe one of the greatest transformations that has ever happened in the world. But we are not doing the transformation for the sake of it. It's because we have done a scan on the market, and when we do the outlook of the future, we see a brighter future. We as Equity are very, very lucky that yes, we could be able to develop coherent strategy, we could be able to attract the right people, we could build the right governance structures, we could build the right product for our customers, we can have great dreams. But the question has always been, does the environment allow those dreams to come true? I want to say we look at the future with a lot of hope. We see a significant upside opportunity in East and Central Africa, and we believe we as Equity Group are uniquely positioned to tap into this growth potential. To some of our colleagues, they think we are the HSBC of Southeast Asia. They believe as an aggregator will be the biggest. When we look at Tanzania, Rwanda, DRC, Uganda, they play at the top of the fastest growing economies in the world. Kenya is not left any far, and when we look at the GDP, the parameters, we are confident that that environment is enabling. When we look at the economic growth potential of what we have said, it is very impressive to see when you look at global GDP at 3.2, And when we look at where we are in East Africa, each of our countries seem to be punching above weight. When we look at the monetary policy dynamics, we see all trading well. When we look at fiscal development, outlook of market, we see very positive trend. This is what gives us an opportunity that that transformation will be value creative and it will create an upside. When we look at our financial ratios, we see a group that is very well positioned. We know, yes, we are suffering from a fatigue of PAL or non-performing loan, but when you look at its coverage, it's not anything of worry. We may have the best coverage of our NPLs in the region. We have seen the cost of risk is starting to come down. And so when you look at the capital ratios, they're at the right place. And that explains why this growth needed to be funded. And it was a delicate balance of balancing between dividend payout and financing the growth. We didn't want to raise capital because that can have very significant dilutive effect at a time when the market are not supporting the best value that shareholders could get. So because we can't raise capital, because it will have a very negative dilutive effect adverse to the shareholders, the only way is to manage that growth and to fund that growth using retained earnings. And then that creates the tension. How much do you pay? How much do you retain? And in the wisdom of the board, the decision was let's comply with the policies and create value for the future. And the good thing is that the retained earnings are generating creative growth. When we look at the guidance of the outlook, we see positive trend. We see us bouncing back to old good days of very, very positive growth. And we can see positive growth in particularly in our subsidiaries. And as a result, we were confident that then it will be possible to pay the dividend as proposed by the board, an increase of 6% from 4 shillings to 4 shillings and 25 cents. And earnings per share have been grown from 11 to 12 shillings, and retaining a pay rate or a payout ratio of 34.5, which complies with the dividend policy that the board has been managing this. This dividend then gives us the highlights of a payout of 16 billion shillings at an enhanced rate of 4 shillings and 50 cents. And gives us confidence that the year 2025 growth will be well-funded, opportunities will be unlocked, and the growth will be creative. Better days are ahead of us. As we have seen, there is an upswing opportunity, and shareholders, we are grateful for the opportunity to continue to serve you. And we are humbled that together we continue to make a difference and make Africa a better place. As an organization, shareholders, board, staff, customers, we are making Africa better. We are contributing to socio-economic transformation, and we are seeing one life at a time being transformed. We are seeing wealth opportunities being unlocked every day, and opportunities for young people being created, and families are developing hope because we support them to realize their financial dreams. Thank you, shareholders. Thank you, Chairman, for the opportunity.
Thank you, Dr. Mwangi. Shareholders, the director's report was also circulated with the integrated annual report, and it is contained on pages 123 to 124. And with your permission, I shall take the report as read. I now call upon Ms. Bernice Kemasha of PricewaterhouseCoopers, our external auditors, to read the external auditor's opinion, which is part of the external auditor's report appearing on pages 129 to 132 of the integrated annual report for 2024. Ms. Kemasha.
Thank you, Chairman. Shareholders, PricewaterhouseCoopers LLP served as the independent auditors of your company for the year 2024. And upon completion of our audit, we issued our audit opinion on the 26th of March 2025, the full text of which is available in the integrated report. And I would like to request that the report be taken as read, other than our opinion, which I will proceed to read as required. And it reads that we, PricewaterhouseCoopers LLP, have audited the accompanying financial statements of Equity Group Holdings PLC and its subsidiaries, which comprise the consolidated and company statements of financial position at 31st of December 2024, and the consolidated and company statements of profit or loss, comprehensive income, changes in equity, and cash flows for the year then ended, together with the notes to the financial statements comprising material accounting policies and other explanatory information. In our opinion, the financial statements give a true and fair view of the financial position of the group and the company as at 31st of December 2024, and of their financial performance and cash flows for the year then ended, in accordance with IFRS accounting standards and the requirements of the Companies Act 2015. Thank you, Mr. Chairman.
Thank you, Ms. Kemasha. Shareholders, as you are all aware, shareholders were given an opportunity to ask questions and to seek clarifications prior to this meeting with respect to the financial statements and the resolutions contained in the notice and agenda of this meeting. Responses were provided to shareholders who submitted questions or sought clarifications prior to the AGM. The responses have been published on the company's website. That said, we will provide shareholders with an additional opportunity to ask any further questions using the questions button on your streaming device or via the mobile phone USSD code appearing on your screen. Please note that we will try as much as possible to respond, but due to time limitations, we may not address all of them. Therefore, all questions received will be collated and the responses will be published on our website after this meeting. Shareholders, let me now invite those wishing to call in with questions to proceed and dial in. Hello. 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 We can't hear you. Can you please give us your name and where you're calling from and proceed to ask your question?
Okay, my name is Emmanuel Masaba, calling from Mutia County. Now I put up my question. First of all, may I take this opportunity to thank the board and the entire employees of Equity Bank for giving us an impressive performance and giving us a dividend. My question number one is, how is your regional business in terms of revenues and stability, as some of the countries are politically, there is political unrest? Question number two, Equity Bank is a recognized banking institution, regionally and beyond, but there is a lot of fraud in the bank. As a board, what have you not put in order that other banks have done? the fraud involves millions of cash. Like in Uganda, Soroti branch, there was a robbery attempt during 2024, around April. If I can get an explanation, it's okay. Thank you.
Thank you, Emmanuel. We shall take a couple more questions, then we shall answer all of them together. Thank you. Hello, good morning.
Good morning, Chair. My name is Sally Chepkorir. Allow me to say this. The most formidable, prolific, and treasured board of directors of Equity Bank, our most brilliant and intelligent chairperson, Professor Iso Macharia, our indomitable CEO that stands the test of all times and at all times, Dr. James Mwangi, the management and staff of Equity Bank. I have to bless you for giving this bank a touch of quality and a taste of excellence. Now, back to my question. My first question is building generational wealth and legacy planning in family-owned business. The question is, how is Equity Bank structured to support these family-owned businesses, and how does it address its challenges? The next question is climate change. Climate change is becoming a tall order globally. What's your take on the negative effects, and how do you ensure green economy and enhancing resilience to this concern? The next question is on mental health, wellness. Mental breakdown at workplaces is a big concern. What measures have you taken as an organization to ensure you prioritize mental wellness of your employees for better performance and well-being of the society at large? The next one is on climate change. Climate change is becoming a tall order globally. What is your take on the negative effects, and how do you ensure green economy to enhancing resilience to this concern? And then finally, it's about AI. AI is driving us today. How does the company planning to incorporate AI into the business? And is it a threat or an opportunity to human resource? Then finally, it's on youth. What role does the company play in enhancing capacity for the youth, since building economy is not a walk in the park? Long live Equity Bank, long live our members, long live our country, Kenya. Thank you.
Thank you, Sari. I will request shareholders to restrict the number of questions so that we can accommodate a little bit more number of members. But Sari, your questions will be answered shortly. Thank you. Good morning.
Good morning, Mr. Chair.
Go ahead. Please give us your name and where you are calling from.
My name is Mary Pauline, and I'm calling from Nairobi. Mr. Chair, I have only 2 questions. But first of all, let me appreciate you in driving the company during this difficult economy. I would also like to acknowledge your no tolerance bad internal system as we saw in the media. My question is, what is the fate of Equity in its investment in DRC? Question number 2, the recent internal layoffs have any legal consequences on the company or its brand? Thank you.
Thank you very much, Mary. Again, we will be answering all those questions shortly. Yeah, shareholders. Looks like there are no more questions. So shareholders, we will be answering those questions shortly. And before we proceed to respond to the questions, we shall provide you with the guidelines on how to cast your votes for the resolutions placed before this AGM, as summarized in the notice of this meeting. Please watch the upcoming video, which will guide you on the voting process.
Welcome to the Equity Group Holdings PLC Annual General Meeting. Once voting is open, you will receive a USSD code on your phone with guidelines on how to vote. You will then receive a prompt on your mobile phone or email asking you to key in and dial the code using your mobile phone. You will be required to follow the prompts to cast your vote. The voting process will be as follows. Registered members will key in and dial the code *483 *824# from any mobile phone network in Kenya, or *760# for Equitel lines. You will then be prompted to select your preferred language. Once you've chosen your preferred language, the next prompt will be as follows. Welcome to the Equity Group Holdings PLC. Reply with 1. Once you have responded, you will receive the following prompts. To approve the annual report and financial statements for the year ended 31st December 2024, together with the reports of the chairperson, directors, and auditors, reply with 1. If in favor, 2. If against, or 3. To abstain. Once you have responded, you will receive the following prompts. Continue following the same prompts for all the other resolutions. Once the vote is made, you will receive a final prompt confirming that your vote is accepted. For voting through the livestream dashboard, you will receive an SMS with the livestream link. Once you click on the link, you will find the Resolutions tab on the dashboard. Click the tab and thereafter click the voting options of your choice. Once completed, submit Vote for Resolutions to complete voting. Closing of voting will be announced by the chairperson. Results of the resolutions voted on will be published on the company's website within 24 hours following conclusion of the AGM. Welcome to the Equity Group Holdings PLC Annual General Meeting. Once voting is open, you will receive a USSD code on your phone with guidelines on how to vote. You will then receive a prompt on your mobile phone or email asking you to key in and dial the code using your mobile phone. You will be required to follow the prompts to cast your vote. The voting process will be as follows. Registered members will key in and dial the code *483 *824# from any mobile phone network in Kenya, or *760# for Equitel lines. You will then be prompted to select your preferred language. Once you've chosen your preferred language, the next prompt will be as follows. Welcome to the Equity Group Holdings PLC. Reply with 1. Once you have responded, you will receive the following prompts. To approve the annual report and financial statements for the year ended 31st December 2024, together with the reports of the chairperson, directors, and auditors, reply with 1. If in favor, 2. If against, or 3. To abstain. Once you have responded, you will receive the following prompts. Continue following the same prompts for all the other resolutions. Once the vote is made, you will receive a final prompt confirming that your vote is accepted. For voting through the livestream dashboard, you will receive an SMS with the livestream link. Once you click on the link, you will find the Resolutions tab on the dashboard. Click the tab and thereafter click the voting options of your choice. Once completed, Submit vote for resolutions to complete voting. Closing of voting will be announced by the chairperson. Results of the resolutions voted on will be published on the company's website within 24 hours following conclusion of the AGM.
Ladies and gentlemen, we will now respond to the questions from shareholders who dialed into the meeting, and we also have received some questions from the live stream to which we shall respond. I now invite Dr. James Mwangi to lead the management in answering the questions. Dr. James.
Thank you very much, Chairman. Shareholders, thank you very much for these excellent questions. We had received 160 questions from you prior to this meeting, all of which we have answered online, but we are glad to take. Let's start, Chairman, with the questions that have been put online. And the first question comes from Paul James Othiambo Onimbo. We have heard Dr. James Mwangi mention that our Rwanda operation is being noted for efficiency. Can he kindly expound on that, and what are they doing differently, and what can be adapted across the group? I will start this question with our Chief Operating Officer. He once served as the MD of Rwanda. So what contributes to Rwanda's efficiency to the level of having a cost-income ratio of around 35 when the group is around 52? Sam Kerobe.
Thank you. And shareholders, the discussion on Rwanda's efficiency as compared to other subsidiaries is a very good case study to see how enterprises can leverage on either technology or culture to enhance efficiency. And if you look at it from including the non-performing loans for Rwanda, Rwanda subsidiary has got among the lowest NPAs in all our subsidiaries. When then that speaks to the returns, then you'd see it in a very efficient model. But beyond that also, when you look at the productivity of staff in Rwanda, across again all our subsidiaries, that becomes very key, and the measurement tools, but also the culture that has been embedded in Rwanda. So broadly then, you'd see the return on asset, the return on equity for Rwanda as a subsidiary compared to other subsidiaries is leading. And what we are doing is trying to scale and see what can we learn from Rwanda as a subsidiary. At the group level, what we do is to learn from all subsidiaries. There's something to learn from each, and how do we embed and then scale that across the group. And that has been seen even in the recent acquisition that we did of Gocha Bank in Rwanda. We still continue to derive better returns from that, and that's gonna increase with technology coming into play. Thank you.
Thank you very much, Sam. Paul James, it's about NPLs. The NPLs of Rwanda are constantly below 3%, so its cost of risk credit risk is very, very low. Productivity of staff is very high. The organization culture is very oriented to performance, and amazingly, even after increasing the business by acquisition of Gocha Bank, the cost-income ratio continued to come down, again signifying how efficient that. At cost-income ratio of 35%, when the group is at 52, it tells you how big the range is. Those are the insights we are borrowing, and that's why I asked the Chief Operating Officer to answer that question, so that those insights and learnings can be put. And that also explains why we have sought a board member from Rwanda to come to the group, bring these insights, and then they could be able to be reviewed. I think now that we have talked about staff culture. There was a question from Mary Colil on the recent process of conduct audit and consequence management. And I will ask our Chief Legal Officer, because you brought in the angle of legal implications, to answer the question. Gertrude.
Thank you, Chairman, and thank you, Ms. Korir, for your question. I just wanted to give a slight background, and then I will answer your question on the legal implications. Now, Equity Group and all its operations, we recognize that trust is the currency of any financial institution's business, and that in that regard, our dealings with customers, how we engage with the societies that we serve, should be above board from a trust perspective. We, the staff, including myself, are the custodians of that trust, and that's a fundamental asset that we have. Accordingly, we maintain as a group a zero tolerance policy to unethical conduct by whatever nature. And accordingly, the group continues to invest in systems, processes, to make sure that our promise to our customers to engage with them ethically, professionally, is never broken. So in that regard, we undertook a process across the group, all the group subsidiaries and the head office, a process that was intended to check all of our individual compliance with our policies that govern ethical conduct. And those policies, first of all, anchored on a code of conduct and business ethics, but we also have policies on conflict of interest, we have policies on anti-bribery and corruption, and we have policies on consequence management where employees fall short of the requirements of those policies. So when the review was done, some of our colleagues were found to have interacted with customers in financial transactions that were not immediately clear in terms of their alignment with how we engage with our customers. Those employees were given an opportunity to provide clarity on those transactions, to explain the circumstances in which they were engaging in payments and financial transactions with customers. Based on those explanations, some of our colleagues were able to explain why they were dealing with customers in the manner that they were dealing with customers, and those employees are back to work, and we are continuing to do the work that we are supposed to do to serve our members. With those colleagues of ours that were not able to explain satisfactorily the nature of transactions, they were given an opportunity to support the explanations they gave with documents. They were given a period of time to do that. And following those explanations, a few other colleagues were then progressed to a disciplinary process, which is part of our consequence management process. Those disciplinary hearings were conducted by panels of peers, so it was not the leadership team involved in the disciplinary process. It was peers of those employees, again, that were invited to explain why they shouldn't be asked to separate with the bank because of those transactions. Following those processes, which were fair and which we were supported with legal counsel, but also with a quality assurance process, we then ended up in a situation where some of our colleagues unfortunately had to leave their employment because they were not able to explain those transactions. And so shareholders, based on the processes that were followed, it was a due process, it took time, it was detailed, it was subjected to a quality assurance process. We believe that our colleagues, even though they exited, were given due opportunity to explain the transactions in question. And so we believe that the fairness of the process and the underlying ethical considerations that underpin that process will support the group's decision going forward. I also want to say, Chairman, that contrary to what may have appeared in the media, the process was not a mass layoff, it was not a redundancy process, it was a process that followed an ethical review and a consequence management process. Thank you, Chairman.
Thank you very much, Gertrude. Shareholders, equity values its culture. An organization is built around its corporate philosophies, beliefs, ethos, and values. And the only way it can hold together is when staff uphold the values. And that is why the board decided to do a conduct audit to test whether the body of staff live the professional values, the ethical values that can earn us the trust, which is the currency of financial systems. We made a commitment and we made a promise to our customers that we'll walk with them the journey of changing their lives, enhancing their dignity, and that we shall support them in their journey of seeking opportunities for wealth creation. So this audit was to check whether we are living these values. And because equity treasures, values those values, then we hold each of us to the expected standards. And we are glad that the exercise have gone well. I think that question is related to the question of Emmanuel from Uganda, Sia, who asked on fraud in Soloti, attempted fraud, incidences of fraud, and I will ask our Chief Internal Auditor to step to the podium and maybe address this question from an internal audit perspective and from a risk perspective too.
Thank you, Dr. Mwangi, and thank you, Emmanuel, for your question. As regards the fraud and the incident which you mentioned in Uganda on the attempted robbery in the branch, it was an attempted robbery. We did not lose any money, and the perpetrators were caught. Just to speak a little bit about fraud generally from a group perspective, we have implemented a number of areas in terms of from a transformation perspective, whether you look at people, processes, and systems. When you look at from a cybersecurity perspective, we have the best-in-class systems. That is led by Thelma Kanaka, who is a global cybersecurity expert, the leading in Africa. And we have made significant improvements and transformation in that area. And also when you look at the control environment, looking at the processes, the systems we have implemented to make sure that your money as depositors, but also generally the group is well protected, as well as the systems that Dr. Mwangi spoke about in terms of infrastructure, making sure that the systems are safe, reliable, available, and have capacity to handle all the transactions that we have, that we process on behalf of our customers. And this is being done across the group, not only in one country. This is done across the group and across all the business lines that we have. Thank you.
I will ask Paul Wafula, who is in charge of compliance and internal control, maybe to give the shareholders a sense of the internal control environment and the compliance. As we all know, Beth, who is leading internal audit, came from being an advisor to the Central Bank Governor of Kenya and head of internal audit and risk in Central Bank. But Wafula was a global leader based in Dubai, overseeing Asia, Africa, and Middle East of an international bank in this area, and could give us a feel of where we are.
Thank you, Chairman. Thank you, Dr. James. Shareholders, so what we are doing as an internal control function is, one, to understand what risk we have. And so we've built risk registers for every job family, every every vertical. What we've also been able to do is to put in place a system to do continuous monitoring. We've granulated our obligations from the different regulations, and as part of that exercise is to ensure that we're aware of whatever regulations apply to us, and they're being monitored at a unit level. We've also done the same with granulating our policies, so that at the end of the day, processes are managed at the unit where the risk happens. And so yeah, we're able to know what will happen before it happens, which probably wasn't the case before. Thank you.
And last but not least, addressing that critical question, because a bank is as good as its control environment, is our head of risk, Patrick Kenoti. Maybe his take on that question from a risk perspective. Mr. Kenoti.
Thank you, Dr. James. Thank you, Chair. Good morning, shareholders. Just to explain a couple of things also we are doing around the fraud management area, which was mentioned by Emmanuel. We're just also in the process of implementing a carrier grade system, actually, which will help us actually look at all the transactions flowing through the group, do profiling, determine exactly whether those transactions should be flowing through. The system as well is going to look at what everyone is doing internally, the user access, what everyone is doing and whether they're doing what they're supposed to be doing. We just started a journey of transforming how we look at the risk in general, using a lot of data, bringing new technology, ability actually to look at the risk profile for the organization at a glance, and do any intervention you need to deal with at the point in time. And also it increases the productivity or risk management function to be looking at the things that are happening at the right time, just to make sure the risk profile of the organization is going in the right direction. Thank you, Chair.
Thank you very much, Patrick. We'll then have Brent address the question, one of the rationale of establishing a rep office in Dubai.
Thank you, James, and through the chair, and thank you for the question. So let me start off with our strategic plan, the Africa Recovery and Resilience Plan. And the plan is essentially, the objective is really to develop value chains. And as we look to develop value chains across our markets, there is no doubt certain factors of production is required for us to bring in to help develop these African value chains, which currently are fragmented. At the same time, market access to markets will be quite a critical consideration for African value chains. One will appreciate that globally trade is reconfiguring, and you can see this taking place with the discussions around tariffs. So as we look to develop value chains, as we appreciate the context in which value chains are reconfiguring, we believe representation in the UAE will help us connect Africa's value chains to global markets. Similar to what Singapore did as a trade and investment hub for Asia, we believe the UAE will do the same for Africa, and in particular East and Central Africa. So our opening of a rep office in the UAE is consistent with our strategic plan of developing value chains and connecting these value chains. You'll also appreciate that many multinationals and many of the partners that we are seeking to support the development of African value chains are headquartered in the UAE, particularly in Dubai, where we expect to set up our rep office. So it's for this strategic reason that we are setting up a rep office to help connect and attract factors of production into African value chains. But also, if you look within the UAE, in addition to it being a trade and investment hub, there is a lot of industries that are developing, and a lot of our clients are expanding themselves and headquartering operations in the UAE as well. So hopefully this answers the question.
Maybe Joy, is there anything as a Group Director, International Affairs, why an office in Dubai?
Thank you, James, and thank you, Chairman. Thank you for the question. I think just to maybe put an exclamation point on Brent's strategic reasoning, we're looking essentially for opportunities for our clients and for our SMEs to be able to grow their businesses beyond the region, beyond the countries that they're in, and to access what are traditional trade routes to the Gulf region and the Middle East. And so for us, it's really about, as James talked about, wealth creation. It's really an opportunity for our clients to be able to access new markets for their goods and services. And that is also the reason why we do trade missions. We've done about 50 since 2021. We have about 6 or 7 going this year. We do webinar series, knowledge series, so that our clients can understand other markets more deeply, and other investors may be able to understand our markets more deeply. So opening a UAE rep office will allow us to offer that opportunity.
Shareholders, we recognize Kenya has signed a trade pact or a trade agreement with UAE, and we want to operationalize this agreement for our customers. The bank is moving from just financial inclusion to empowering customers to drive the African Recovery and Resilience Plan, transforming agriculture, transforming manufacturing, transforming mining in Africa, and developing energy. And we realize that that will not happen unless we bring the world to Africa and take the world to Africa. We realize Dubai is a huge hub that we can use to facilitate trade. We see the bulk of the world population, or more than 50% of the world population, is in Middle East and Asia. And as a result, that is an area that we are focusing on. We have realized that India is building momentum to quickly transform the way China did, and we think linking Africa to that transformation, so that if possible, India can pull Africa and move along through linkages of trade and investment, and that is why the Dubai office. We have done this also by opening a European desk, or 3 European desks, a French desk, a German desk, and we are about to open a UK desk. And this again is to create a facilitation and a catalytic impetus to the European Union Kenyan trade agreement, for instance, so that we link trade, we link businesses, and ensure that we are creating markets. So it's more of facilitating business. Trade finance is big in those desks. It will be very big in the Dubai office, as will be treasury opportunities. So it is more of playing our new role as a catalyst for development, going beyond financial inclusion to wealth creation by transforming the opportunities on the African continent to actual benefits for the people from a business perspective. There is a question from Aquabata Capital Limited. NPL ratio at Equity Bank Kenya remains elevated. Is there any correlation between the situation and the unfortunate fraud cases that have been uncovered? And what is the management winning in addressing the NPL matters? I will call on our Chief Credit Officer, Sam Kitwekere, to lead the take. And to put it in perspective, the NPL for Tanzania are below 3, the NPLs for Rwanda are below 3. We see DRC is around 5. Uganda has gone down to 12, but Kenya remains elevated to 20%. So if you can explain, maybe the managing director of Kenya can also take accountability to the shareholders and following you through on what he's doing to ensure that we don't continue talking about Kenya and NPLs.
Thank you. Through the chairman and CEO, the NPLs for Kenya do not have a correlation with the staff issues. They have been elevated for some time. During the year 2024, we saw a few large corporate groups move into NPL, specifically a few groups in the real estate and hotel sector, so that led to elevated NPLs on that front. We also saw an increase in NPLs coming out of our consumer personal lending portfolio, arising from delays in receipt of remittances from the various employers of the members that the group had lent to. These are being followed up. The corporate loans are well secured with office property, hotel properties, and the salaries from the employers are being followed up. Specifically, some of these were to employees of a few of our counties in Kenya. Equally, as you heard from the group CEO earlier on, the loan book was flat year on year. Kenya actually had a slightly shrinking loan book, and therefore we have the denominator effect. On the one hand, the NPLs reflecting growth, as I've explained. On the other hand, the denominator remaining flat or slightly shrinking. So the net effect is a slight increase in the NPLs. That being said, various recovery actions are ongoing, and our expectation is for the NPL numbers for Kenya to come lower during the course of this year. Thank you, Chair.
Managing Director, Kenya, Moses Nyambanda, what are we doing about those NPLs?
Thank you, Dr. James, and good morning, Chairman, and good morning, shareholders. Shareholders, we are not in a desirable position at this point, as you've pointed out. But as management, we've taken this head on, and there are a couple of initiatives that we are driving very hard as management to ensure that we do resolve the elevated NPLs position in Kenya. The first one is around generation of quality loans, and we've taken steps in terms of streamlining our processes, our control checks as we do generate loans, so that we ensure that we are not stockpiling the already existing bad loan position. The second one is very enhanced monitoring, and that's done at a very granular level to ensure that there's accountability at each member of staff who generated a loan, and we ensure that recoveries and monitoring is done at that level. And Chairman, the most promising one is then how we deal with the stock of NPLs that currently exist. Shareholder, the chunk of the NPL book is limited to specific names, so it's not a pervasive element in terms of number of customers who defaulted. Of those limited names, there is a very advanced process in terms of where we are on the recovery journey, including resolving these matters through court processes You may have seen some of those in newspaper headlines, and we are inching into that, and we believe that by end of Q3 and early Q4, we should be in a good place in terms of NPL. Thank you.
Thank you very much, Moses. I just want to reinstate what our managing director has said. The full cycle process of recovery, most of them are coming to an end. We have seen we have got judgment or court judgment in our favor in all the matters that have reached the end of the cycle, and we are now on the recovery. And as Moses said, we are very optimistic that Kenya should be below a 10% NPL by the end of this year. Because the legal process that has been holding us back, they are coming to decisioning movements. Shareholders, if we go to the question of DRC, Patrick Kenyajui asked, what is the state of business in DRC with recent conflicts, and what is the management doing to combat further escalation? That is the same question by Mary Khalil. What is our take of investment in DRC? I will ask Group Strategy Officer Brent Malhai to answer the question.
Thank you, James, and through the chair, and thank you for that question. So let me start off with the strategic rationale on us entering and allocating capital to the DRC. One, it's consistent with our strategic positioning of social and economic transformation. You'll appreciate that the DRC, in terms of its economic indicators, is somewhat 20, 30 years where Kenya was ago. At the same time, the market opportunity of the DRC of 100 million people, around 8% of private sector credit to GDP, and the enormous opportunities in agriculture as well as extractives, provides a lot of opportunity for financial institutions like Equity Bank to have both a growth consideration, but over time as well, a return consideration. You'll also appreciate that us allocating resources and capital to the DRC helps with the diversification geographically, but beyond just the strategic fit and the opportunities it provides for banking, you'll notice James mentioned our 4 capabilities, or our 4 verticals of bank, insurance, technology, and the foundation. This will be replicated in the DRC as we've done in other markets, particularly in Kenya. We'll do the same in the DRC. So the opportunities we see in banking, we see the same in what we will do in insurance, and leveraging off our technology business to drive that penetration and the cross-sell of our insurance products and our banking and payment products. At the same time, consistent to our strategic considerations of social and economic transformation, the foundation, given the context of the DRC with the low penetration, the foundation will play a capacity building role and a community supporting role as well. In terms of the impact that our exposure to the DRC has had given the conflict in the East, first and foremost, you'll notice that there is a lot of discussions on both sides to resolve. There is a lot of international interest given the critical minerals position of the DRC and the agricultural position. So there's a lot of strategic international interest and regional interest, as you've seen the efforts by the East African community and the SADC as well in resolving the conflict. The impact has been limited. In our Q1 results, you can see when you look at the local currency reporting, the business continues to grow, particularly the P&L. So in realizing this opportunity, we've also appreciated that our management structure, our execution structure needs to be also well considered. So late last year, you would have seen a press statement on how we have restructured the operational structure of the of our equity BCDC operations into regions, and we've introduced a substantive management team as well, where we've introduced 4 managing directors. 3 are commercial in nature, and the other one, which is finance and operations, supports the commercial activities. So you'll also note that the DRC, with its abundance of opportunities, is also quite sizable in landmass as well. It's 2 million square kilometers. It's almost 4 times the size of Kenya. So these management structures, this enhancement in management reflects the opportunities that we saw back in 2015 when we entered the market, and we increased, and our conviction was further reflected in our acquisition in BCDC. So the conflict has not impacted the business. It has not changed our strategic view of the country, and the position of the DRC and the interest that the DRC continues to attract further reinforces our decision in allocating capital and resources to the DRC. Thank you, James.
Thank you very much, Brent. We have heard from a strategic perspective and from the market opportunity, but let's now hear from our Group Director of Capital Allocation about his view of allocating capital to DRC.
Good morning, shareholders, and thank you, Chair. We've had a very good experience in the DRC, starting with the acquisition of ProCredit and then BCDC. We've seen continuous growth in that subsidiary. When we acquired BCDC back in 2020, we attained more corporate bank, so we're looking to refocus the bank on SMEs. We see continuous growth into the future. We have seen returns which were in the single digit improve quite significantly. So you'll see, as of last year, the return on equity for equity BCDC is now significantly higher than where it was in the previous years. And we continue to invest in the business, expecting it to continue to grow. Thank you.
Thank you very much. Shareholders, when we bought ProCredit 2015, our total balance sheet was 150 million. By 2020, 5 years later, that balance sheet had become $800 million. So you could see a compounded growth rate of about 6 times in 5 years. When we bought BCDC, the then largest bank in DRC, it also had an $800 million balance sheet. Merging and aggregating the two gave us a $1.6 billion balance sheet. The accounts that we have presented to you, our balance sheet in DRC is to the tune of $5.1 billion. We are now not talking of millions of dollars, we're now talking of billions of dollars. And we can see that is the trajectory that Equity Bank Kenya experienced when it was growing 10 times every 5 years in every facet, whether it's balance sheet, whether it's P&L. When we acquired BCDC, the return on equity was 8%. We are optimistic that the DRC this year will give us return close to 25%, catching up with the return on equity. When you combine that growth, very rapid growth, combined with high return, then you can't beat that investment. As a result, in managing that region, we have taken cognizance that the DRC is geographically as the same size as East Africa, where we have 5 countries. It is bigger than Western Europe, but with limited infrastructure. As a result, to fully unlock an DRC opportunity to be closer to the customers, we are managing DRC from 5 regions, and each of the regions is being managed by a managing director, so that is they are a deputy managing director, so that they are closer to the customers. Each of these deputy managing directors have a P&L and a balance sheet and their own staff, and have an element of autonomy other than regulation and governance. So we can see how vast DRC is. The concerns about conflict in DRC, uncertainty in DRC is valid. But when we look where DRC was 2015, when we entered that market, and where DRC is today, uncertainty to us, risk to us has reduced dramatically. The conflict that we talk about is on the Eastern region. Eastern region is the conflict area is less than half of our Eastern region, which is under one deputy managing director. So when we look at even the Eastern region, where the conflict is, we have sustained and maintained our balance sheet. We have maintained our profit and loss, and out of approximately 12 branches, only 2 branches are adversely affected. So that gives you a full perspective. We can't say it's business as usual because of uncertainty, but we are supporting our customers, we are supporting the country, and we are supporting the world from the contribution that DRC is making. And we are more focused on strengthening our presence in DRC than being worried about the DRC as an investment destination. That leads us to a couple of questions on climate change, the negative and adverse effects of climate change. How are we helping our customers to mitigate? How is the bank responding to positively contribute to solution? I will give that question to our head of sustainability, Oscar Jogona, and our director, the economic director, to respond to the question. Oscar.
Thank you, Chairman. Dear shareholders, we overwhelmingly acknowledge the growing effects of climate change, and we are addressing this through the key engines of growth in the business, through the commercial engine, through the social engine, and with a focus on sustainability. On the commercial side, the priority is for us to deploy increasing sustainable finance in areas that address adaptation and mitigation, including smart agriculture and areas around supporting the adaptation of the infrastructure. So through our partnerships with institutions like IFC, we have deployed finance across these sectors. And recently, we were nominated for Pride through IFC for deploying over 47,000 transactions in the space of climate change adaptation. The other focus for us from a financial perspective is making sure that we continue to mitigate risks through our environmental and social risk management process. So that's around risk management and deploying finance. Through the social engine, we are focusing on training and capacity building, which I think Dr. Joanne will talk about, including the other initiatives around reforestation, etc. So we've got these two focuses, and obviously from a strategic perspective and our strategic plan on ARRP, our focus is to ensure that the development and support to the value chains is done in a responsible and socially, environmentally compliant manner.
This issue of climate change is not just a an environmental issue, but it's an economic issue. And I want to invite our group economist, Tanzania Wele, to bring the perspective of the economic impact of climate change.
Thank you, shareholders. Thank you, Chair. Thank you, Dr. James. I think one of the things that's been clear is the increasing macroeconomic and sectoral impacts of climate change. So one of the roles that I do and I lead in the economics function is not only understand the performance of our economies as standalone entities, but to triangulate that with the increasing impacts we're seeing in terms of climate change and green and extreme weather events. So one of the things that we do quite regularly is to look at the sectors in the ARP. Sustainability is a cross-cutting function, and then try and understand to what extent is our economic growth, our sectoral growth, and the value chains of priority being impacted by climate change. The other big thing we look at are the monetary and fiscal policy impacts of climate change. These are substantial. We're very glad to see a lot of our governments are beginning to acknowledge these impacts. And we saw, for example, the Kenyan government in the Resilience Sustainability Facility by the IMF clearly beginning to take very good steps around managing the macro impacts there. We're seeing this in other economies that we cover, and we welcome this, and this is part of the way we intersect economics with green and climate change issues. Thank you.
Thank you very much. From our group foundation, we're not just addressing social concerns, and we have really focused on sustainability. And as Oscar said last year, we are cited by IFC as the bank that had given the highest number of loans for mitigation and adaptation all over the world. So that puts perspective how serious we have taken this issue, simply because we focus on the bottom of the pyramid. Knowledge there is limited, so we have taken it upon ourselves to capacitate and help them de-risk. We are glad IFC has been very supportive, giving us climate response funds. We, together with the IFAD, we are seeking $180 million to invest in that area to strengthen the resilience of businesses that are being affected, to be able to support mitigation and adaptation efforts to ensure sustainability of our business model and sustainability and resilience of the businesses of our customers. Dr. Joan, both as a medical doctor and also supporting Equity Afya, Sally was concerned about the state of the mental health and wellness of society and our employees. What is your response to Sally's concern?
Okay, thank you very much for the question, Sally, and thank you, Dr. Mwangi, through the chair. Shareholders, how Equity views staff wellness and also the wellness of the communities in which we engage is actually a strategic investment. We look at it beyond just the mental health focus. We look at the entire the entire wellness wheel, looking at all components when we refer to wellness. So physical, mental, wellness, psychological, financial, emotional, the entire wellness wheel at the end of the day. How do we go about that? Is that it's been embraced and adopted, and we have a drive from the highest level of leadership as far as the Equity Group goes. So because of that, we've put in place the infrastructure to be able to support the delivery of mental health and mental wellness, both for our staff and for the communities. For our staff, for example, in terms of infrastructure, we've ensured that health services and mental health services specifically are within reach via the Equity Afya facilities. And where conditions actually require further care, we've ensured that we have, beyond our own infrastructure, partnerships in place to be able to ensure that we can escalate the care as needed. So it's with the psychosocial wellness counselors. We have mental health specialists, practitioners, the psychiatrists in place within our panel. And as part of employee value proposition as well, we've ensured that their benefits packages, as far as the medical covers go, provide that mental wellness support. Beyond that, as far as performance goes, looking at the staff aspect as well, we've also ensured that we are enforcing elements such as rest. So if we actually look at staff performance measures, you'll find duration of leave actually embedded as a requirement to ensure that our staff are getting very good rest. I think in addition, and finally, is that we also ensure that we have a very robust mechanism in terms of feedback, because one of the drivers of exposure as far as mental wellness goes is the inability to speak, where you feel constrained to be able to express yourself. So we have channels within the organization, a speaker policy, and staff can deliver or express their challenges or concerns, even in the most confidential manner. So we look at it from all fronts, and we appreciate that we have the support from the highest level of the organization as far as that goes. Thank you.
Maybe Victoria, as Group Director for Governance and Strategic HR, is there anything else to add, given the concern the shareholders have raised about our staff and our recognition as, of staff as a strategic resource?
Thank you, Dr. Mwangi, and thank you, Chairman. So to add on what Dr. Joan has said, within our various packages, in terms of our medical, we have provisions that allow staff to access services for counseling where they are needed. And even within ourselves, I think we have regular engagements, and we've been able to form various clubs where employees can have moments to engage and share what they have within themselves, both for women, both for the men clubs, various book clubs that allow us to at least be able to participate in other activities outside of work where people can freely engage. So within our medical facilities, staff are able to access all counseling services that are required within professionals and be supported. Thank you.
Thank you very much. I think we now going back again to the question of Sally. Sam Kirobe. Sally wanted to know how the group is using AI and whether AI is a threat or an opportunity.
Thank you, Dr. Mwangi, and thanks the chair. Our shareholders and Sari, AI is among the space that is evolving day and night, and it would be correct to say that the development on that space when we had the last AGM and now is massive and on a different scale. And without straight saying whether AI is an opportunity or a threat, Equity Group has decided to use the lens of massive opportunities that are brought by AI, and I'll highlight some few cases of how the group is using that. But not only equity, but globally, if you look at the space of CX for our customers, in 2023, a lot of the transformation in the financial sector, 25% of that was brought through AI in 2023. But in 2024, AI alone was able to transform to 60% of that space in CX. That's just showing how much it's impacting the transformation in those spaces. And as equity on that space, issues of responding to the customer complaints, ability to be able to serve you better when you come to our branches or interact with our channels, of course, in line with the data regulation, we're able to see more whole 360 degree of our customer view than before using the AI models. I also speak to areas of development of our products, and you may have seen that either in USSD, the features that we enhance in our app. We have a product house that develops product and digitizes those products. And the area of code and software generation, the transformation brought by AI, globally there's no data for 2023, but a lot of transformation for 2024. 44% of transformation in that space was led by AI. We have embedded that, and just like I said, you see more features being rolled in our digital application by using AI. But not only that, the pricing and risk management also, fraud detection in those channels. There's been a growth between 13% in 2023 and 32% transformation brought by AI in that space. Currently, we process an average of 20 to 22 million transactions in a day across all our subsidiaries. And I'll be correct to state that the development in terms of monitoring the transaction, being able to monitor from an AML perspective, from a fraud perspective, including cross-border transactions, and our GLs is massive, and we've embedded to the tune of almost 40% of those processes. And beyond even the monitoring, the process engineering, the automation of the processes, the back office processes is massively being led by AI. And you may have seen the vulnerabilities and operation losses going very low significantly between last year and this year. But also would also be suffice to say that AI brings itself a number of challenges, and you've seen the development all the way from vanilla AI, the Gen AI, the AI agents, and the agentic AI now coming into play, which requires a lot of investments from a governance perspective. And our risk department has not been left behind. There's massive investment, global benchmarking on AI governance, and also in compliance with the regulation that we have to abide with. So that is actually ahead. Infrastructure development also to manage that, but also talent and training, both at management and at board, but also our customers. You've seen a lot of mentions going out. How do you manage your passwords and that space? So you'll see more benefits, cost reduction, particularly on the back office processes that are automated. Lastly is a question I think you also mentioned, Sari. Does AI bring a threat to our staff? AI increases productivity from a staff perspective. If you visit our branches earlier on, just to give an example, if you go to withdraw, the staff would only be able to give you what you had gone for. But with AI, our staff will have a bigger visibility on what you need. You also see that even when it comes to credit scoring, and you've seen the number of digitized loans going higher because by use of AI, we're able to embed more data and have better credit scoring models. Thank you.
Thank you very much, Sam. Sally and our shareholders and investors, when we look at AI from a strategic perspective, we have recognized that AI is not the threat to us, but the threat is a business using AI. If we are not using AI, they become more competitive than us. They have more information, they are more responsive, they are more efficient. So then AI is hence an opportunity for us to become more competitive than anybody else not using AI. It's becoming sharper in using information for decision making, and more importantly is using for the industrial technologies, which truly is the benchmark of what technology could really be able to do. We want to thank you, shareholders, for last year approving the appointment of Dr. Evans. Dr. Evans, a native of California, the Silicon Valley, with 82 patents to his name, has been very instrumental at the group board in helping management and helping them, the board. The foresight of the board to appoint Professor Waema of the IT Department, University of Nairobi, on the board of Kenya, the insight to appoint Andrew Ligere on the board of Rwanda. The two of them has become significant together with Evans in advising management on how to cope with a changing dynamic and environment. That leads us to Saleh's last question about youth capacity and enhancement. And I will ask Dr. Joan of the initiatives that the foundation has rolled out to build capacity, to de-risk youth and to give them opportunities, and if possible, give us numbers.
Okay, thank you, Sally. Thank you, Dr. Mwangi, and through the chair. Yeah, so Equity Group Foundation's focus area across our 7 thematic areas is on capacity building as a tool for de-risking, and especially for our target populations, number 1 at the base of the pyramid, and then for women and the young people. One of our successful programs within the foundation, most successful on the capacity building front, has been the Young Africa Works, which was a program targeting women and youth specifically to be able to de-risk them and then lend to them. When we look at the reach as far as that program goes, to date the program has been able to train about 640,000 MSMEs, comprising of largely, as I indicated, women, young people, and also those MSMEs that give opportunities in terms of employment for women and young people. So 640,000 MSMEs trained. And when we look at individual women and youth, 2.4 million have been trained through the Young Africa Works program. We've also looked at the success in that program in terms of the amounts in loans that have been lent, and so far we've done, over the course of that program, about 400 billion Kenya shillings lent under the Young Africa Works. We've done the same thing in food and agriculture, focusing on individuals, farmers, individual farmers who we've supported to convert to agripreneurs. And under the agriculture portfolio over the course of about 5-year period program that we run in partnership with NORAD, we're able to train 3.8 million small-scale farmers who we then supported to convert to agripreneurs. Under that program, we successfully lent 75 billion shillings to the farmers, given again that the loan sizes in the agri-portfolio for the smallholder farmers was much smaller. So we're rolling that across all sectors. Equity Afya, our own as well, is one of the others where we are focusing on capacity building, and that has driven the success of the network that has today grown to 137 medical centers. And the capacity building program there in health is a health entrepreneurship program that now not only applies just to our Equity Afya facilities, but to also other health sector customers of Equity Bank. Thank you very much.
Sally, it's not just training them and capacitating them to grow into business, but we are also de-risking them. If you look at African Guarantee Fund, we're the largest partner together with MasterCard Foundation. We have been able to build a guarantee fund in excess of 100 billion to support young people to realize their dreams, to remove the barrier and the challenge of getting credit facilities for young people. But I think it is creating opportunities, particularly for our equity leadership scholars, our Wings to Fly scholars when they finish. And we see the young people we have taken to TVET who didn't get opportunities to go to universities. All of them get absorbed immediately after their TVET program. So again, creating opportunities for them. Those who went to university, as I'm sure you are aware, Sally, we have taken the doctors first, and now we have seen they have been able to open 137 medical centers, converting medical doctors into entrepreneurs. And last year alone, they were able to attend to 3.3 million patients. So you can see the impact of supporting young people. Learning from the lessons of the Equity Afya medical doctors, we're now creating a franchise of pharmacists. We have made health affordable, accessible, and of a very high quality. We also want to ensure that the pharmaceutical drugs being sold in the country are of the highest quality, they are genuine, they are properly priced, and we are working to roll out 1,000 pharmacies using the students or young people that we sponsored to do pharmaceutical courses. So quite a lot in that area. I think the last question is again from Saleh, building generational wealth. As from our vision, our objective is to support and mission to support our people to unlock opportunities for wealth creation. That wealth unlocking opportunities is mainly through household or family businesses, micro, small, and medium enterprises. And I'm so glad that 72% of all our loans are to micro, small, and medium enterprises, distinguishing is ourselves. The other micro enterprises that create a lot of intergenerational wealth is agro businesses, because the bulk of our population is in rural areas. And those are the areas that Dr. Joan has given us the numbers. That's the areas we have done extremely well. But we have realized that we need to do even better, and that is why, as Sam Kirobe said, we are strengthening our product house to ensure appropriate products that are tailored to help families to build intergenerational wealth. We have realized that coaching and mentoring will be essential and central, and we are loading investment clubs across, and have agreed to be the sponsor, patron of those clubs, so that we can have the skills, the competencies that a group put at the disposal of families that are in business to be able to grow, not just to start a business, but to grow and to become experts. We have come to the realization that business is a profession like any other profession. To be a good accountant, we all go through certification. To be a good doctor, we go and train and get certification. But we tend to believe that you don't need any training and certification to be good in business. And that might explain why 80% of businesses fail within 5 years. So we have felt that we need to challenge this trend and change this trend by inculcating a culture of learning, a culture of training to be entrepreneurs and to be business people. And so we'll work together to ensure that is done. Isaac Mundonga, you had a question. What other alternative expansion decisions is our board considering, e.g. West African countries or South? Thank you very much, Isaac, for a great question. If you look at our expansion strategy, we have made a commitment that we shall be in 15 countries by 2030. We have also made a very bold decision to seek a board that has knowledge, capacity in expansion, in mergers and acquisitions, so that we could be able to execute that mandate. But when it comes to execution, equity follows trade. We follow our customers, and that is why we have done a clipping strategy. So when we do the mapping, we see the countries that would regard as low lying fruits for our regional expansions to be the countries that neighbor the areas of operation and have very strong trade routes. So that brings Zambia, which has a very strong link between DRC and Tanzania, into picture. It brings Mozambique, which has a very strong relationship with Tanzania, Zambia, and DRC, and it also brings to picture Angola. So those are three countries that we are doing expansive research and checking for opportunities. But we have been also in Ethiopia for the last 6 years with a rep office. The government of Ethiopia have opened up that industry. We are also studying timing and the opportunity of entering that market. So we can see 4 possible markets within the neighborhood of or are largely linked to the countries of operation. But when you look at our staff, our group director of credit is from Ghana, Emmanuel Macday. We look our chief IT director, Michael Kofi, is from Ghana. Our chief data scientist is from Nigeria. So when we look that way, we are seeing we have about 30 staff from Ghana, from Nigeria, from Cameroon, from Cote d'Ivoire, and that also is an indication of the potential countries that would be then the next wave after clipping in the countries that we have presence. So that broadly gives you a picture, because we are an African bank, and an African bank is larger than East, Southern, and Central Africa. But those will be done on timely basis when the opportunity. Mr. Chairman, we have taken a long time, but the questions were wonderful questions that has given us an opportunity to be able to explain to our shareholders the state of their investment and to make clarifications that may be of concern so that they can make the right decision and to support us from a point of knowledge. We thank you, Chairman, for your forbearance.
Thank you, James, and management for responding so adequately to our shareholders' questions. Shareholders, I trust that we have given adequate consideration to all matters contained in the integrated annual report and the questions raised by the members. We have now closed the question and answer session. Shareholders will now commence consideration of the proposed resolutions. I will request the Company Secretary to read out the proposed resolution with respect to Agenda 1 on the financial statements contained in the integrated report pages 133 to 258 and to confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To receive, consider, and adopt the consolidated audited financial statements of the company for the year ended 31st December 2024, together with the chairman's, directors, and the auditor's report thereon. Chairman, Emily Maina has proposed and David Duarte has seconded this motion.
Shareholders, the resolution as read by the Company Secretary has been proposed and seconded. I now put it to the meeting for voting. I will now request the Company Secretary to read out the proposed resolution with respect to Agenda 2 and confirm if we have a proposer and seconder.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To declare a first and final dividend of Kenya shillings 4.25 per share in respect of the financial year ended 31st December 2024 to be paid to the shareholders on the register of members as at the close of business on 23rd May the year 2025. Chairman, Stephen Kemani has proposed and John Wandungo has seconded the motion.
Shareholders, the resolution as read out by the Company Secretary has been proposed and seconded. I now put it to the meeting for voting. I request the Company Secretary to read out the proposed resolution with respect to Agenda 3 and confirm whether we have a proposer and a seconder of the motion.
Shareholders, the resolution put forward to you is as follows. To receive, consider, and approve the directors' remuneration and the remuneration paid to the directors for the year ended 31st December 2024. Chairman, Charles Cherongoni has proposed and Joseph Getumaha has seconded the motion.
Shareholders, The resolution as read out by the Company Secretary has been proposed and seconded. I now put it to the meeting for voting. Agenda 4 is on the election of directors. The directors being eligible and offering themselves for election are Mrs. Farida Kambata, a non-executive director, Mr. Nick Donoho, non-executive director, Dr. Rosias Uche Odu, non-executive director, Mr. Obadia Biraro, non-executive director, Dr. Lakshmi Shyam Suda, non-executive director, Engineer David Mutobo, non-executive director. The profiles of the proposed new directors were posted on the AGM portal. I now request the Company Secretary to read out the proposed resolutions with respect to this agenda and to confirm whether we have proposers and seconders of each motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To approve the appointment of Mrs. Farida Kambata as a director who, having been appointed by the board on 26 August 2024, retires from office in accordance with Article 101 of the Company's Article of Association and being eligible, offers herself for election. Chairman, David Duarte has proposed and Virginia Mwangi has seconded. On Part B, Chairman, the motion is to approve the appointment of Mr. Nick Donoe as a director, subject to regulatory approval, who, having been appointed by the board on 14th March 2025, retires from office in accordance with Article 101 of the Company's Article of Association and being eligible, offers himself for election. Chairman, Joseph Getuma has proposed and Freddie Kongedo has seconded this motion. On Part C, shareholders, the motion is as follows. To approve the appointment of Dr. Alucius Ucheudu as a director, subject to regulatory approval, who, having been appointed by the board on 14th March 2025, retires from office in accordance with Article 101 of the Company's Article of Association and being eligible, offers himself for election. Chairman, John Wandugo has proposed and Stephen Wandani has seconded the motion. On Part D, shareholders, the motion is as follows. To approve the appointment of Mr. Obadia Biraro as a director, subject to regulatory approval, who, having been appointed by the board on 14th March 2025, retires from office in accordance with Article 101 of the Company's Article of Association and being eligible, offers himself for election. Chairman, Samuel Mwangi has proposed and Diana Kokwaro has seconded this motion. Shareholders, on Part E of this agenda, it reads as follows. To approve the appointment of Dr. Lakshmi Shyam Sunda as a director, subject to regulatory approval, who, having been appointed by the board on 12 May 2025, retires from office in accordance with Article 101 of the Company's Article of Association and being eligible, offers herself for election. Chairman, Fauzia Abdallah has proposed and Eunice Kihara has seconded this motion. Shareholders, on Part F of this agenda, the motion is as follows. To approve the appointment of Engineer David Mutombo as a director, subject to regulatory approval, who, having been appointed by the Board of Directors on 14th March 2025, retires from office in accordance with Article 101 of the Company's Article of Association and being eligible, offers himself for election. Chairman, Regina Maru has proposed and Mary Kavungwi has seconded this motion.
Shareholders, the resolutions on the election of the proposed directors have each been proposed and seconded. I now put them to the meeting for voting. Shareholders, we request you to note the following directors who retire from office in accordance with Article 100 of the Company's Articles of Association and, though eligible, do not offer themselves for re-election. Dr. Edward Odudo, non-executive director, Mr. Vijay Gidmo, Non-Executive Director, Dr. Helen Gishohi, Non-Executive Director, and Mr. Samuel Kirobi, Non-Executive Director. On behalf of the board, I extend our heartfelt appreciation to Dr. Edward Odudo, Mr. Vijay Gidmo, Dr. Helen Gishohi, and Mr. Samuel Kirofi as they retire from the board. Their steadfast commitment, strategic foresight, and exemplary leadership have been pivotal in shaping the group's governance, growth trajectory, and long-term vision. In recognition of their remarkable contributions and invaluable expertise, they will continue to serve in key strategic roles across the group and its subsidiaries, ensuring continuity, strengthening institutional memory, and enhancing the group's capacity to deliver sustained impact and value. Shareholders, Agenda 5 is to approve the election of the following directors to the Board Audit Committee of the company. Mr. Obadia Bilaru, Dr. Alois Uche Odu, Dr. Lakshmi Sham Sanda, and Dr. Evanson Faya. I now request the company secretary to read out the proposed resolutions with respect to this agenda and to confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. In accordance with the provisions of Section 769 of the Companies Act, Cap 486 Laws of Kenya, to approve the appointment of Mr. Obadia Biraro to the Board Audit Committee of the company. Chairman, George Ngereshi has proposed and Paul Nganga has seconded the motion. Part B, shareholders, it reads as follows, the motion. In accordance with the provision of Section 769 of the Companies Act, Cap 486 Laws of Kenya, to approve the appointment of Dr. Alucius Odu to the Board Audit Committee of the company. Chairman, Joseph Mbuyuka has proposed and Joseph Otuke has seconded the motion. Shareholders, Part C of the motion. In accordance with the provision of Section 769 of the Companies Act, Cap 486 Laws of Kenya, to approve the appointment of Dr. Lakshmi Shyam Sundar to the Board Audit Committee of the company. Chairman, Stephen Mew has proposed and Simon Kiambi has seconded the motion. Shareholders, Part D of the agenda, the motion reads as follows. In accordance with the provision of Section 769 of the Companies Act, Cap 486 Laws of Kenya, to approve the appointment of Dr. Evanson Faya to the Board Audit Committee of the company. Chairman, Charity Njora has proposed and Francis Adika has seconded the motion.
Shareholders, the resolutions on the appointment of each member of the Board Audit Committee of the company has been proposed and seconded. I now put them to the meeting for voting. I will now request the company secretary to read out the proposed resolution with respect to Agenda 6 and confirm if we have a proposer and seconder.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To appoint Mr. PricewaterhouseCoopers, who were first appointed in the year 2017 as auditors of the company, to continue as auditors of the company until the conclusion of the next annual general meeting, in accordance with Section 721 of the Companies Act, Cap 486 Laws of Kenya, and to authorize the directors to fix their remuneration for the ensuing financial year in accordance with Section 724, subsection 1 of the Companies Act, Cap 486 Laws of Kenya. Chairman, Simon Mwangangi has proposed and John Munene has seconded the motion.
Shareholders, the resolution on appointment of external auditors has been proposed and seconded. I now put it to the meeting for voting. Shareholders, we will now proceed with the special business of this meeting. The first special business of this meeting is in respect to approval of policies, pursuant to Regulation 2.21 of the 13th Schedule to the Capital Markets, Public Offers, Listings and Disclosures Regulations of 2023, hereinafter referred as the CMA regulations. The company has therefore prepared the drafts of the following policies to ensure compliance with the provisions of the CMA regulations, and the Board of Directors recommend that the shareholders approve the policies. I now request the Company Secretary to read out the proposed resolutions with respect to this agenda and to confirm whether we have proposers and seconders of the motions.
Thank you, Chairman. Shareholders, the ordinary resolution put forward to you is as follows. Part A, to consider, if deemed fit, to approve their directors' remuneration policy pursuant to Regulation 8.21 of the 13th Schedule to the Capital Markets, Public Offers Listing and Disclosure Regulations of 2023. Chairman, Dina Kokwaro has proposed and Emmanuel Obare has seconded the motion. Part B of this agenda, to consider, if deemed fit, to approve the stakeholder engagement policy pursuant to Regulation 8.21 of the 13th Schedule to the Capital Markets, Public Offers Listing and Disclosure Regulations of 2023. Chairman, Edward Omongi has proposed and Samson Odera has seconded the motion. Shareholders, Part C of this agenda, the motion is as follows. To consider and, if deemed fit, to approve the transparency and disclosure policy pursuant to Regulation 8.21 of the 13th Schedule to the Capital Markets, Public Offers, Listing and Disclosure Regulation 2023. Chairman, Benson Kiari has proposed and Albanas Wambua has seconded the motion. Shareholders, Part D of this agenda, the motion is as follows. To consider and, if deemed fit, to approve the dispute resolution policy pursuant to Regulation 8.21 of the 13th Schedule to the Capital Markets, Public Offers, Listing and Disclosure Regulation 2023. Chairman, Lydia Cherotich has proposed and Thomas Mwangi has seconded the motion. Shareholders, Part E of this agenda, the motion is as follows. To consider and, if deemed fit, to approve the board appointment policy and procedure pursuant to Regulation 8.21 of the 13th Schedule to the Capital Markets, Public Offers, Listing and Disclosure Regulation of 2023. Chairman, Cyril Mtange has proposed and Margaret Mutitu has seconded the motion.
Shareholders, the ordinary resolutions to approve the policies pursuant to the CMA regulations have each been proposed and seconded. I now put them to the meeting for voting. Shareholders, the second special business of this meeting relates to the establishment of a representative office for Equity Group Holdings PLC, the company, in the United Arab Emirates, UAE. This stems from the recognition that A, the establishment of a representative office in the UAE is in the best interest of the company and its shareholders, and B, the Board of Directors of the company has approved the establishment of a representative office in the UAE subject to the approval of the shareholders and obtaining the requisite regulatory approvals, and recommends that the shareholders of the company approve the establishment. I now request the Company Secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder of this motion.
Thank you, Chairman. Shareholders, the ordinary resolution put forward to you is as follows. Part A, that the establishment, subject to obtaining the requisite regulatory approvals of the representative office for the company or any of its subsidiaries in the United Arab Emirates, UAE, hereinafter the representative office in the UAE, be and is hereby approved. Part B, that the board of directors of the company be and are hereby authorized to take all actions necessary to effect the establishment of the representative office in the UAE, including but not limited to executing and filing all necessary documents and agreements and paying all associated fees and expenses and putting in place all the necessary structures, commercial arrangements, and any auxiliary arrangements relating to the conduct and undertaking of the business of the representative office in the UAE. Chairman, Rhoda Ongachi has proposed and Alois Chami has seconded the motion.
Shareholders, the ordinary resolution to establish a representative office for the company in the UAE has been proposed and seconded. I now put it to the meeting for voting. Shareholders, we have now come to the end of the special business. Voting will close at 1 p.m. and we encourage shareholders who are yet to exercise their voting rights to do so. The results, having been independently scrutinized by PricewaterhouseCoopers, shall be published within 24 hours on the company's website. I will now ask the Secretary to confirm if there is any other business for discussion for which due notice was given.
Thank you, Chairman. Chairman, I confirm that there is no other business for discussion for which notice was duly given. Thank you, Chairman.
There being no other business of which notice has been duly given, this marks the conclusion of the business of the 21st Annual General Meeting of Equity Group Holdings, PLC. I take this opportunity to thank our shareholders who are joining us today from across approximately 30 countries around the world, from all corners of the world, for their continued support as the business navigates a dynamic and evolving environment. I also extend our appreciation to our stakeholders for championing our social impact agenda, to our board members for upholding the highest standards of corporate governance, and to management for their dedication in delivering strong results. I thank you all for your attendance, and I declare the meeting now officially closed, and wish to invite the Reverend Evans Miranga to close with a word of prayer. Reverend.
Thank you very much, Chairman. Let us believe and pray. Almighty God, our Heavenly Father, we come before you with thanks for your presence in our midst. We thank you, Lord, for what we have been able to achieve through the year 2024. And we want to commit the remaining part of this year before you, praying for all our plans. The Lord, you shall establish them and give us success. Dear Lord, we want to thank you because of our shareholders. We want to pray that, Lord, you'll bless them and the work of their hands. We also want to commit to you all the stakeholders within our business. The Lord, you may continue to walk with us even as we work together for the common good. We want to commit the board before you, led by our chairman, thanking you, Lord, for their time, their sacrifice, and their leadership. We particularly want to pray for those that are retiring from the group board. The Lord, as they transition, you continue to give them good health, fulfillment, and joy in their next chapter. And as they are reassigned to other roles within the group, may your hand, Lord, be upon all of them. We also commit those that are coming on board. The Lord, you may give them the grace, the wisdom, and the commitment to steer this organization even to greater heights. We want to commit the senior management led by our group CEO, Dr. Mwangi, before you. The Lord, you may continue to strengthen them, give them the wisdom, the discernment, so that the decisions they make for the good of this organization, and even, Lord, that we may continue to see good results. We commit all our employees and all our customers who have journeyed with us over the years. The Lord, you may continue also to establish them and to bless the work of their hands. Our Father and our God, we also want to commit the nations where we operate before you. This morning, Lord, we want to particularly pray for our nation, Kenya, that our Father God, you will continue to bless the leadership. The Lord, as they govern, that Lord Jehovah, you shall help them to understand that this is a divine assignment, that they will be able to do it to the development of our nation and the well-being of all our citizens. Our Father and our God, we pray for peace and stability so that, God, we may continue to enjoy even doing business in all these markets. Heavenly Father, now as we come to the end of this meeting, may your peace reign in our hearts and your presence to continue dwell in our midst. May all glory, honor, and praise be unto your name. Send us out with your blessings and keep watch over us and our family. So, Lord, graciously hear our prayer and grant all that we ask according to your perfect will. In the name of the Father, the Son, and the Holy Spirit.